everyone. This is Jill Hurston, Director of Marketing at Accelerate. Welcome today to episode 15 of ZipChat. With that, I'm going to turn this over to our host, Mike Watson. Mike, take it away.
Hey, everyone. Welcome to ZipChat episode 15, Data Visualization in FinTech. With me today, I have Jim Sloan from Accelerate. He's the CIO and EVP of Financial Services. Hey, Jim, welcome.
Hi, everybody.
I also have Aladdin Abu Ghazali. He's from Foresight. He's the founder and CEO. I think I got that close at least.
You did. It was close enough. Thank you.
And also I got with us is David Krein. He's the global head of research at Market Access. Hopefully I got that right. Welcome to the topic. So just a little bit of an introduction to the ZipChat. It's a casual format, panel format. We're looking to have an open discussion about this particular topic, which is interesting. And feel free to chime in and ask any questions. All you need to do is type into the chat box, and Jill, our producer, will give me the information that you have a question, and we'll try to answer that in real time with the panel. So feel free to do that at any time, and we'll try to get those questions in. With that, let's move on to the topic. So the topic today is about visualization, in particular in FinTech, but just generally the importance of visualization for people to be able to do their work, right? So if the data is coming at you in a way that's difficult to sift through, then it's very difficult to do jobs, especially when you're talking about summaries of data and some of the telemetry coming from systems. So with that, I'm going to go ahead and get the panel involved. Actually, first, let's do a poll. That seems like a great idea. So we're interested in how important is data visualization to your product success. So if you don't mind selecting one of the choices real quick, that'll give us an idea where everyone is in terms of their importance.
All right, Mike, everybody's voted. Let me show you the results.
Mission critical for the win. Yeah, that's what I would expect. I mean, more and more the way data is being presented and how we're able to take action on that data is becoming critical for end users. So very much expected. All right, so Jim, so data visualization is kind of a broad topic, or maybe it's difficult to pin down. So for the purpose of this discussion, what do you think data visualization means? And in particular, how do you think it applies to FinTech?
Sure, Mike, thanks. So I know it sounds kind of cliche, but everyone's heard the expression that a picture paints 1,000 words. But it really rings very, very true in this space, and particularly within FinTech. Visuals, like simple bar charts and pie charts, or even more sophisticated graphics like heat maps, bubble charts, time series graphs. I mean, they all tell a story. Not only are they telling a specific story, but they facilitate faster and more complete comprehension of large and complicated data sets. They help users spot patterns and anomalies in the data. And effectively, visualization is critical for the accurate processing and digestion of financial data, particularly financial data. And it's especially true in the advisory world, due to the regulations, right? There's fiduciary obligations to handle clients' financial assets and their portfolio with great care and with precise alignment to confirmed investment strategies and risk tolerances. It's more critical now than ever in light of an advisory firm's care obligations as part of the recent SEC Reg BI regulation, which went into effect a couple of years ago. And compliance to this regulation was required in June of last year. So visualization is important, in effect, to understand the data. And in many cases, in particular within financial services, solutions and services are regulated, right? So it's really important to understand the data, and visuals help that.
Jim, just jumping in for a second on the Reg BI, that has been a wake-up call for a lot of firms that haven't focused on the data modeling and ultimately the visualization that goes behind it. not only do you need clear visuals, but they need to be customized for the role of the person looking at it. So the advisor seeing it probably needs a different view than the branch manager and the compliance officer or the CEO. But all of that information really needs to be coming from the central source of truth, the central data model that's supporting the firm. And as we'll talk about in a little while, the amount of data that's accumulating that you really need to be able to handle is massive. And I'll give examples of that a little later, but you're absolutely right. The intersection of compliance, audit trail, and data visualization is absolutely here.
It's a great point, Aled.
So there's been a lot of changes in the business environment, just massively more data coming at us, et cetera.
Right.
And that's really put a stress on the existing tools. So why don't you give us some examples of, these stresses that are happening?
I mentioned data silos earlier, and one of the challenges you have, especially when you're talking about something like the care obligation, which Jim mentioned earlier, if you just think for a second about the volume of data that's accumulating each day. So if you have a portfolio that, let's say, has 50 positions and you're tracking risk for every client, account, position, scenario, and then you're saving that data for 260 trading days a year, and then you've got 1 million or 2 million clients, the amount of data that's accumulating each day is staggering. And to be able to link that back to visuals that help answer a simple question from regulators is not a simple thing. The regulators now are asking, why do you have a reasonable basis to believe that the positions that your clients have and the recommendations that you're making are aligned with their best interest? And the answer to that question really needs to be backed up with a structured system in place that has the workflows built in and has the ability to manage that volume of data and store it and secure it. But trying to answer that question without a structured process in place would be very, very difficult. And the way we look at it is this is a good example where logging daily client risk states and saving all that data is important. Logging user interaction with the system, their access to various parts of the system, all of that can make a huge difference. But again, that generates more data. So the key, I think, is going to be to have the structure in place to acknowledge that you need to be able to manage this massive amount of data and present it in the visuals that are relevant to all the users within that firm.
Yeah, that makes sense. So another issue that I think is out there, Aladdin, and maybe you can confirm whether this is true or not, is speed of the analysis. Right? Being able to react quickly to these things seems to be a little bit problematic as we summarize data.
One of the challenges that you have when you're generating this massive amount of data is there's probably a lot of good insights buried in that data. Unfortunately, if you have the data and don't have a way to mine it to get the information that you need, it's very possible that there's a problem brewing that in hindsight you miss. And it's actually even more important today, given the care obligation of the new rules, to be able to surface these problems early and surface them to the people who can deal with them with the workflows linked into those visuals so that they can do something about the problem. So again, if you're looking at a firm that may have 10,000 advisors and 5 million clients, or even a small firm that may only have a few advisors and a few hundred clients, invariably there's something going on in some portfolio that if you have the data there, you need to be able to surface it easily and quickly. And data visualization makes a huge difference in the ability to address that business risk.
Yeah, that makes sense. Totally. Yeah. So, David, any comments on any of that?
So I'd like to take the first question that you had asked with respect to Market Access's perspective. So Market Access runs an electronic trading venue for global corporate bonds, very similar to what NASDAQ and the New York Stock Exchange do for stocks, we do for corporate bonds. We enable trading to occur. We ourselves are not party to the trades. But one interesting distinction is that as the venue, we collect all of the interactions for trading parties down to the click, a lot of which does not ever get observed by the participants. And so we can see, aggregate, and anonymize a lot of that and present it visually back to them to better inform the next trading behaviors on the platform, and essentially use their aggregated anonymized information to deliver value back into their workflow for the subsequent transaction. So the visualizations that we represent are their prior activity along with the platform's aggregated anonymized activity, so that they could draw insights that would not otherwise be available from simply participating as a trading counterparty on the platform. That has a lot of implications. So we design our visualizations not to be outright reports, but to be interactive toolkits where they can drill into the data very systematically across a range of trading attributes and parameters, such as hour of the day, the type of bond that's been transacted, the liquidity of the instrument. They can get a real feel for the data. And what I've learned through this visualization journey, actually I've learned many things, but for the end user most of all, the objective is to actually become trustful of the data. We as data scientists and data owners and data aggregators in many respects already trust the data, but the users often do not. And so the data often can tell the story that anyone cares to tell, but in fact, our users are looking to understand a way to trust the data, value where it can benefit them, and then begin to digest that more systematically. So for us, it's about putting the full menu of data in front of them, allowing it to be interactive so that they can draw the insights that are most useful for them. That requires us to have our data model in tip-top shape with all of the integrated bells and whistles that go with it, all of the attribute data, and all of our tables linked and clean. To the extent that there are data errors or miscaptures, we stretch out the timeline to earn their trust.
Yeah, that sounds right. Sounds like a good approach, actually. Let's go back to Jim. So, given these problems, there are some large players in the data visualization space, or business intelligence, maybe more generally. How are they doing? Are they able to support this easily, intuitively, affordably?
Great question, Mike. Yeah, so I think most of the audience have probably heard of, some of the key players in data and analytics, Tableau being one, Microsoft Power BI being another great analytics solution, and really great solutions. Frankly, Gartner, even in their latest Magic Quadrant on analytics and business intelligence solution, which was back in February this year, they still recognize Tableau and Microsoft Power BI as the clear industry leaders. I think also in that quadrant was Click. But the problem is these types of licensed tools, introduce their own cost and skill requirements, right? So depending on a project's scale, there's often significant cost and learning curves involved, and the skill set must be maintained on an ongoing basis. And the end solution is often too generalized, right, to provide a very specific visualization requirement. So, I mean, as alternative to some of these tools, organizations really should consider working with a solution engineering firm, particularly one that excels in customer experience and UX UI design and development. I'm sure Mike, one or two might come to mind, right? Yeah, so but such companies can really help build out a customized visual solution that really better targets the specific problem using latest JavaScript technologies, libraries like D3 and Chart, or you know, JavaScript development frameworks like Angular and React and Vue. These visual solutions can be built into a library that can then be reused for other solutions in the organization, and it really significantly adds to their value, and at less cost, very often at less cost than licensed solutions.
Yeah, interesting. So Aladdin and David, you both, are involved in making technology decisions for your companies. Does this resonate with you? Like having these focused controls that are, custom built, does that seem to be a more flexible and powerful way of proceeding?
In our use case, our business is really to integrate risk, compliance, and business intelligence, and it's very focused on the wealth management vertical. So the needs of that space on not just the data modeling, but the reporting and the customization and so on, the level of expertise available from the users, to Jim's point, is most of those people are not individuals that have the expertise to work effectively with a Tableau or anything like that. So to make our technology accessible to our clients, I think we have to do a lot of that work by trying to think about what their needs might be in advance and being able to rapidly iterate as they provide feedback. So I think Jim is absolutely right. Being able to partner with someone to get those thoughts from client feedback to a proof of concept to production quickly, I think is very, very important, and it's worked well for us.
There are lower cost approaches to getting started with visualization. You can certainly generate charts with R scripts and spit out PDFs, use Visual Basic and Excel. There are lots of ways to do that, even at scale. The challenge really becomes that they have low customization and ad hoc interaction. They're challenging to distribute the output, and it becomes cumbersome to manage that code. And so we had gone through that cycle for several years in pulling together the micro charts out of R, or some visualizations out of Excel. But in the end, we maxed out what it is we were able to do with those tools. But they're certainly viable initial approaches. We got to the point where, using those tools, we were producing 100,000 PDFs a month, and still not able to satisfy the permutations that our clients were interested in digging into, and recognized that we needed a bigger scale tool that had more expertise packaged out of the box for that type of interaction than we could bring ourselves. So we refocused on Tableau and for that visualization, and then the team emphasized the data modeling to be able to feed in the necessary elements to get the visualization right and get all the interactive moving parts available to our users. So it's certainly a multi-year journey, and we're frankly still on it.
It's interesting, David. I'm sorry. Go ahead, Mike. No, I was just going to interject that the audience shouldn't rule out the possibility of a sort of a hybrid solution, right? So Tableau, as David points out, was kind of a critical tool that they used inside, but there's also a fair amount of customization that's required, which is what I heard him say. So it doesn't have to be one or the other, right? A hybrid approach to solution engineering often involves build and buy, right? So just wanted to throw that in there.
Yeah, I was thinking the same, and I just wanted to add to that by saying and asking David, does Tableau support decent level of customization of the widgets? You can install your own widgets into the flow, or however it works behind the scenes pretty easily.
Yes, so far they've been able to support what it is that we need, and I mean we do a lot of our own front end building and customization to make sure that we've got consistent look and feel across our widget suite, regardless of what data point we are representing. And that's a fair amount of work, without question. So we have full-time resources focused just on that, separate from the data modeling side. So Tableau by itself does not, at least for us, had not delivered kind of an out-of-the-box, ready-to-go solution. It's quite a bit of work to set up each of the visuals, and then behind the scenes to actually publish and make available to our users, both internally and externally, requires Tableau server installations, and in the cloud has, you know, its own overhead. So by no means costless. Not out of scope for what we had expected, but we had built the homegrown versions. We've taken those as far as they could go, frankly, beyond where they should have gone. And we made that successful, and we evidenced demand, which supported the move to the Tableau expense.
Okay, so what you're saying is at a certain scale, your homegrown solutions didn't work out as well. So you're looking for a partner that can really help you scale. That makes sense, because I'm imagining you're at a massive scale given what you're talking about. Your market.
Certainly now we are, and we've got a multi-front approach where we have internal users with more complicated, sensitive data availability. We have external users, clients that have a different views and different security layers on top, and more, you know, in most cases, more limited access and functionality. And then we have for the data science and research teams, sort of all-in access to data via Tableau, so we can experiment and really learn what visuals work, how should the data interact, how do we develop new metrics, so more of the laboratory. So it's a more than a full-time gig. It's now a whole team focused on getting the data out the door. But I would qualify all of this as, you know, visualization for us is a node on a distribution tree. So we look to distribute our trading data externally, and visualization is just one form of distribution. So having our data models in order and putting that information visually in front of traders has actually accelerated our commercial data sale business. And that is as important, if not more important, than the visualizations themselves. You know, getting those automated data flows out the door, once individual traders and users have gotten comfortable with the interactions and they trust the information, then the commercial data sales often follow in large scale.
Got it. All right, well, this topic actually leads decently into our next poll. So Jill, why don't you bring that poll up? And let's get some more insight from the audience. So this poll is asking, what problems do you see adopting visualization in analytics? You know, we talked about scale. There's other things out there. So.
And one thing I would recommend, there's several answers that could be applicable in your company, but just pick the best one.
Yeah, good point, Jill. Thanks for pointing that out. So there's a question from the audience, and while people are finishing up here, I'll just ask generally to the panel: what type of skills do you need to hire for this? You know, just quick, brief summary of key skills.
So I can take that as a start, Mike. I would say, I'm not sure who's actually asking, so sorry, I don't know your first name, but you know, if you're building a custom solution, I mean, JavaScript is a very, very popular technology. You know, there's a lot you can do with, say, and we'll talk about this maybe a little later too. There's libraries like Chart and D3 that can be used. They're good JavaScript libraries, D3 in particular. You know, if you are looking for a more bespoke solution, whereas Chart tends to be more for standard types of charts, like pie charts and graphs. But JavaScript itself, technology, computer software developers, not unlike those at Accelerate, can help build out customized solutions in JavaScript libraries and frameworks. You know, popular examples there include Vue and Angular and React, all of which can be, leveraged for different reasons depending on really the dispositions of the developers, right? You know, some folks like a more open, a solution that's more open to the community. Others want a more structured framework like Angular would Angular would provide, whereas React is more, more of an open forum, and has the whole ecosystem attached to it. Vue, if your learning curve is short, Vue would be a great technology to pick if you want a nice clean solution that you can ramp up your team quickly with. Obviously, if you're going to go for one of the licensed solutions that we've been talking about, they often have their own IDEs or development interfaces that you need then to train some folks to learn how to use those. So it's not just a matter of buying the solution and having your IT team install it, but it's a matter of actually teaching some end users, key end users in various departments, or even having a small team of folks that are skilled in those particular tools, that can help engineer and engineer solutions, more scalable for your organization. So I hope this helps answer the question a little bit.
Yeah. So Jim,
can I jump?
Oh, go ahead.
Can I just jump in for a second? This is Aladdin. That was a very comprehensive answer on the technical skills. Just to give you an insight, we get we get a lot of feedback from clients or potential clients, and what we find is the skill set, before you get to the people that Jim just described, you need to have someone who can essentially hear the feedback from the client and maybe develop a prototype or a proof of concept. It could be in something as simple as VBA and Excel, just to design the idea, get and refine the business rules, and then if the client or the team confirms that's where we want to go, we then turn it over to the design team, who then take that and make it look attractive and intuitive. And once that's done, then we go to the development team. So the skill set is business analysis, design, and then development at our side.
Yeah, that's actually what I was going to bring up. Is it seems like there's a user experience portion of this, and also, the user experience with leaning towards how to present this type of data, right? Like if you're just a general user experience designer, you may not actually be able to deal with visualization as a specialty, because I think it is probably a specialty inside of that environment. That's my thought. David, any thoughts on that? Same.
Yeah, we've actually kept our visualizations fairly straightforward. And so we've got either simple line charts or simple bar charts, nothing more complicated than that. We tend not to put more than one on a given page. The analyst that's responsible for any given widget is effectively the product owner of what we are attempting to visualize. And so, for example, if we are attempting to visualize trading activity, we have someone on research that is responsible for that data. They have the domain expertise around that. They are responsible for the underlying data asset, and then positioning the widget elements to enable users to access the drill down information that's most relevant to their users. So, the analyst has, all of our analysts are data scientists, and they have quantitative backgrounds and they understand data quite well, but they really also have the necessary domain expertise to translate the data model into something that is usable and applicable. And informally, I hold them accountable for making sure that users are actively engaged with the widget, that it's adding value to certain trader workflows.
Yeah, that makes sense. Sort of verifying that you're actually thinking in the right way by, querying the audience. Yeah, that makes sense. Jill, let's show those poll results real quick.
Sure.
We haven't really get to that yet. So I'm trying to see on my screen where we're at. So lack of skill set, that completely makes sense. Because I think it's a nuanced skill, like we were talking about. So so moving on from there. So David, I think because there's nuanced skills, maybe lack of training and all of that. So how do you get past that, I guess? Like, what strategies are you using to bring the right skills into place and get past this sort of understanding problem.
Yeah, so we've got a few different skills at the table to bring a widget to life. We have the lead analyst that's responsible for the data model and ensuring that its representation on screen is complete. But we also have other analysts that are responsible for Tableau, and they essentially build out the standards and the framework necessary to hold all of these pieces. We don't hold the quant analysts responsible for that. So, for example, our Tableau analysts have laid out what the page should look like. How big is the visual? How should the filters work? Drop downs versus radio buttons. How do you build out your audit trail? How do you reflect back to the user what's actually, the summary of what's been selected, and so on. So all of those standard elements are sort of off the shoulders of the quant analyst. The quant analyst can focus on the data model, ensuring that the representation is right. So it's really the intersection of the two. We don't expect to find that skill set mixed in single individuals. It's a challenge and unnecessary as long as these different roles work well together where they need to intersect.
Yeah, so those two, so in order to gain the right amount of data literacy, I think that was a term you used when we were having some prep calls. Those two have to work very closely together to share what they're seeing, I'm guessing.
Yes, they have to work very closely together. There's no question. And the data literacy is really on the side of the user, and the level of data literacy among the users can vary widely. So we're mindful of that as well. And we have what I think of as a simpler set of controls, or sort of a minimum set of controls that are necessary to drive the visualization, often 3 or 4. But for power users, we have a deeper catalog of interactive elements that may number 20 to 40 to get very granular all the way down to the individual row in the data set if that's what's desired. So there's really something for everybody. Arranging that so that it fits into one widget is tricky, but that's really where we've spent the earliest part of our thinking on this.
Yeah, makes sense. Let's move on from sort of the problems and sort of some of the organizational solutions to this, to like how do we move visualization forward? And so, Jim, I know you and I have talked about AI and how it might fit into visualization. Can you talk about that a little bit?
Yeah, sure, Mike. And it's a great topic, these days, because AI has made its way, well, really into every industry, but particularly in FinTech, we're seeing it in a lot of different places. But the amount of data basically that needs to be processed on a daily basis. When you think about, portfolio analytics, for example, and Aladdin will have some things to say about that a little bit, but the amount of data needs to be processed on a daily basis when managing portfolios against specified models and strategies is just enormous, right? And so advisors need tools to help them, quickly identify accounts that might be drifting away from agreed investment strategies. They're going to want to identify those accounts that are doing much better or worse than expected in terms of returns. And they're going to want to help quickly identify those accounts that might be presenting risk characteristics, right, that are not aligned with predefined tolerances, right, which again goes back to that whole best interest regulation, right? It's really critically important that that the end users, that are the investors effectively that are trusting advisors, and advisory firms with their money, that they are really staying within the correct tolerances, right? But there's a lot of data on a daily basis, and maybe Aladdin can speak to that in a minute. But there's so much data that needs to be digested that tools are needed, right, to help not just visualize the data, but like in terms of graphs and charts that like David was talking about, but to detect patterns and positions that may not be so obvious, right, in terms of it might not be obvious to the human eye or so easy to identify because of the sheer volume of data. So I think with the help of artificial intelligence and machine learning, particularly in the advisory space, predictive models can be developed and then integrated with analytic systems to facilitate detection of these blind spots, right? And then expose them with the appropriate visuals.
Yeah, so essentially you'll develop some insights, and those insights possibly would enhance your visuals by annotating them or providing some additional information on them. I think, Aladdin, you have some examples of that. So I think what we'll do from here is we're going to do one more poll. We're going to switch control over to Aladdin so he can do a little bit of demo of system he's working with. And yeah, so here's the poll. What steps have your organization taken to improve, enhance data visualization analytics? So a lot of you said this is really important. Now we're asking sort of how are you going about it? Where are you at in your journey?
And again, Mike, this one could be multiple answers. So just whichever one suits you best. And I'm ready to show the results with you if you want, if you're ready.
That sounds great.
There you go.
And are you all set on your end as we go through this?
I need to share screen.
Yeah, it'll come up as soon as we're done looking at the reviews. So other. So it looks like some people found partners and everyone else is sort of in some phase not listed here. Okay, interesting. It'd be great to dive into that. So, if anyone wants to, post on our social media or, somehow where you're at in the journey with that other means, that would be really interesting. We'd love to hear. Okay, go ahead, Aladdin, and share your screen. Let's move into that demo.
Can you see the
yeah, we
data
see
visualization objectives? Excellent. Okay, so this is not intended as a product demo. This is just intended to show examples of some objectives that we have for data visualization. We're very focused on decluttering. We want to keep the discussion simple. We want to make the point clearly. Also, when we present visuals, we want to make them actionable. You want to identify a problem, explain it, try to map out a path to a fix. Also, you want to customize the view to the role of the user. As I said earlier, an advisor is going to have a different view than a branch manager, than a compliance person, than a chief executive. And all this information for regulatory purposes needs to be able to tie back to a very tight audit trail. And that audit trail should be built automatically as a byproduct of the use of the system. So you're not asking advisors to end a meeting and then spend 30 minutes writing notes. The system should, based on how it's being used, be able to build that audit trail. Ultimately, we prefer to embed the technology in whatever environment the clients are already in. So if an advisor is already using Salesforce, then we don't want to ask them to jump out and go into something else. So embedding the technology in the native environment for the user, I think, improves the experience and usability. And then I want to talk a little bit about flagging problems early, along the lines that Jim mentioned earlier. There is a clear use for AI in this vertical. As I go through these examples, please understand that they're intended to be, each visual should touch on one or more of these. It's not just intended to touch one. Ideally, you're touching 3 or 4 or 5 of them, but let's continue. So if you think about clutter, you saw this when you first logged in. When the pandemic began, there was some stock market volatility, and the press, of course, as always, was breathless. So you see some of these very dramatic headlines with, the Dow plunge, a spike in volatility. I particularly like this touch about mayhem. So if you're an investor looking at this, and then you call your advisors because you're nervous, the advisor really needs to have a way to help you declutter and think about this in a way that's relevant to you. So putting these headlines aside, if the advisor was able to pull up the daily risk projections for that client's portfolio going back in time and showing that, for example, today, this client portfolio is projected to lose 12%, if the S&P 500 drops 20% in a single day, similar to an October 87 scenario. But what's interesting about that projection is how stable that range has been. So that's the projection as of today, looking at 16 years worth of data. The worst this projection has been is 12.3, and the best that it's been is minus 10.3. In other words, this portfolio has stayed within a 2% range for 16 years, including the financial crisis. And it really helps put the COVID scare into perspective, because you could see, yes, risk did go up, but it's relatively a blip when you compare it to the whole history. So this is an example of going from clutter to context, and it's very helpful for the advisor-client conversation. Continuing, I think one of the things that advisors should be able to do when they're dealing with clients is you start simple and then drill down only if you're required. You saw this screen earlier during the discussion, but basically there's only 6 pieces of information on this screen, and they're all very, very relevant to that advisor-client conversation. Now, all of these can change depending on what drop-downs you select, what sampling windows you use, what shock size you apply, but the goal is to start with simple. And if you start with the simple view, if the client, for example, wants to know where that $2 million of risk is coming from, you can drill down in steps. You can show them, for example, that this risk breaks down by account. Of course, internet questions are always fun during live demos, but you can see how the $2 million in risk breaks down by account, and you can see most of the risk is coming from this one account. If the client wants even more detail, you can drill down to the risk by instrument. But the concept here, start simple and then go into more detail as requested. Another area that I covered in the priorities was make this relevant for the user. So if you're an advisor and you come in and you need to be able to see the problem and then deal with it, an advisor can come in the morning and they can see, okay, I've got 104 clients that are green, they're within tolerance. I've got 3 that are elevated according to the firm. The firm defines elevated as this client is at 90% of their stated tolerance. And then I've got 3 clients that are actually currently projected above tolerance. Now, what this allows the advisor to do is to see this pattern, but then also do something about it. If the advisor wants to tell the firm, I acknowledge it, I see it, they can click on the acknowledge button and essentially tell the firm. So when you hit the acknowledgement, the advisor can put in a reminder date. They can tell the firm what their next action is going to be. They can make notes. And as they make notes, that history is maintained. So you can see in this example, you call the client, they're on vacation and so on. The whole history is there. And this goes back to one of the comments I made earlier, which is you want to build your audit trail as a byproduct of the workflows in the system, so the advisor doesn't have to jump through a lot more hoops. Because if you think about it, the advisor may look at this and say, well, the firm considers risk elevated at 90%, but I want to see my book of clients at a lower number. So they can move this slider to 70%. And now instead of 3 yellow households, you've got 19, which gives the advisor more time and room to call these clients, to make notes, and so on. So this is the view for the advisor. For the chief of compliance for the whole firm, they may come in the morning and they may look at the whole firm and see, okay, we've got 5.2 million clients that are green. We've got 147,000 that are elevated. But the good news is the advisors have acknowledged most of them. So the advisors are on top of it. The same thing is true of clients that are above tolerance. The advisors have acknowledged them. When a branch manager logs in, that branch manager may want a totally different perspective. Let's say this branch manager in the Chicago office has an advisor who's on vacation, and they just want to quickly check that advisor's whole book. Well, this red line is 100% of every client's tolerance. that branch manager can simply move the slider and see exactly where that advisor's book is. So this is an example of customizing the view, but it also goes back to the question that David mentioned earlier, is all the users have to trust this data. And all of the reporting that you're seeing here is coming from the same source of truth. So I think that's very important. So the other example of building audit trail, imagine the advisor is starting a meeting with a client. They can literally restrict what that client sees during the client meeting by just telling the system, I want you to narrow what is viewed during this client meeting to just these two portfolios. So when you do that, the system knows the client meeting is beginning, and compliance has imposed that this disclaimer should come up. And this disclaimer is very simple. It basically reminds the advisor to remind the client that risk projections are based on models, they're not guaranteed, and so on. But when the client says, I get it, the advisor clicks on client accepted. And what's happening behind the scenes is all of this activity is being logged. So you can see here that this disclaimer was accepted by this client for this report on this day, working with this advisor. So logging all of this user activity builds the audit trail, not just on the client's risk states, but it's also building the audit trail for the advisors engaging on behalf of the client and the management team and the compliance team overseeing that advisor. The other point I wanted to make is about placing the functionality in the environment for the user. So in this example, let's say an advisor using Salesforce is simply visiting the Wall Street Journal website. The risk system identifies that the Adams household has just entered an elevated risk state. You could see this is a Salesforce notification. You can click on it. It can take you directly into your native environment, which is Salesforce in this case. It can open the Adams household. And within Salesforce, we can embed a widget. This is fully functional. It delivers pretty much all the functionality that I've just finished showing you. And you can have different views without, again, leaving Salesforce. But when it's time to make a trade recommendation, the advisor can do a what-if analysis with a client. But let's say they are considering investing in this ETF. Well, the system can also make an automated API call to downstream vendors and pull in other similar products or share classes that may have the same sort of exposures at lower costs, or it may filter this list if it's too long through the approved list of the firm. But once they click add instrument, the system will prompt the advisor to log their reasoning for this recommendation. I'm selecting it because this instrument has a long track record, experience management, and so on. This is critically important for, again, documenting the audit trail as the advisor is working. That advisor does not have to spend another 10, 15 minutes writing notes on this. In seconds, they were able to document that audit trail is in place. So 5 years from now, if a regulator asks about the recommendations for those clients, all of this stuff is there. The last point I want to make, yeah.
So hopefully you don't mind me interjecting here, but I think the really key thing about this particular screen that you're showing is the idea of combining visualization and integrating them into other tools. I think that's very powerful, not just to make your own separate thing, but to actually embed it in the workflow so that, like you said, it's much easier for the analyst here to do or the portfolio specialist to do what they need to do, because all the data is there right in one place.
That's true. And I also want to tie back to a point that Jim made about surfacing problems with AI. If you go into again, I covered the amount of data that's being stored daily. It's absolutely massive, and it's growing geometrically. This is an example of something that would be difficult to find if you didn't have some kind of automated process monitoring and reporting. This is a client portfolio that these are the daily projections for that client's risk if the S&P drops 20%. And you could see when the pandemic began, the risk profile of this portfolio in a period of less than 2 weeks went up significantly. In fact, this is a $500,000 portfolio that on February 24th, 2020 would have been projected to lose $31,000. A year later, that same portfolio is projected to lose $82,000. Well, what's scary about that is this is exactly the same portfolio. There have been no trades. The portfolio is at new highs, so everybody's getting positive statements. There's no flags to really alert the firm, compliance, the client, or the advisor that maybe a conversation with the client could be timely right now. Even if the advisor is comfortable with the lack of diversification here, they at least should be notified that the risk is significantly higher than it was a year before. And this is a perfect use case for artificial intelligence, where you can be mining the data on 5 million client portfolios and identify a pattern like this so the advisor can pay attention. For compliance, they would be mortified to know that the client's risk has almost tripled without anybody even noticing. Jim, I just wanted to close the loop on that point that you made.
You know, thanks a lot, and that's just a splendid example of leveraging AI to help mine through gobs and gobs of data. You know, and one other point here too, that in all of these demos and the screens that have been showing, and in David's explanation, how do you do this without visualization? How do you do this without graphics? I mean, it's just near impossible to provide the services we are. You know, in the industry, in the financial industry, and in the industry, you can't do it without, you know, visualizations, and that's really underscores really the need for, you know, skilled, not just skilled technicians, but choosing the right solution, you know, and solution provider, whether it be a Power BI or Tableau or a Click or a customized solution. You really can't tell the story. You really can't make the data meaningful, you know, to even provide the service, the underlying service, without the visualization.
Well, also, Jim, one final point is, in the old days, this kind of visualization might have been limited to the business analysts. Now, every stakeholder in the firm, from the advisor to the client to the branch manager to the compliance to the CEO, are not going to tolerate being given a spreadsheet with 10,000 rows and said, here's the filter, figure it out.
Right.
Yeah, I think you know, as people get more and more comfortable with, you know, seeing data this way, they want more of it. Like, I think that's what's happening. I think mobile apps have, you know, started that revolution, and then it's just, you know, really accelerated a lot over the last 10 years. So I think this is a natural place for us to be in the industry, but it's, you know, not everyone's doing it yet. So, you know, not everyone's an expert. So it is difficult to get talent. I mean, that was the question that came from the audience, is how do we get this done? And, you know, there's more questions which are too much in the technical weeds, but, you know, questions around, you know, how do you properly do the data modeling? You know, what tools do you use to scale and things like that? And, you know, we can certainly publish some answers to those questions separately. We don't have time today to do that. We're kind of at the end of the story. So, David, any last thoughts from you as you go through this?
Yeah, I would add that we're, you know, the point of the journey we're on is really moving towards what I describe as visual first, in that we have visualizations for a lot of the analytics and tools that we provide. Tableau has a great feature which is called share screen, and it will create a link for a very specific visualization that an analyst may have themselves entered onto screen to share it with another user. And the sharing of that link will enable another user to replicate it and continue the journey. So we're attempting to move away entirely from PDFs or copy paste into emails or Excel worksheets, and really describe everything through this visualization first. If we can get it up on screen, we know we've got all the underlying data models in order, we've got all of our metrics in order, and we can communicate purely in an electronic format and allow for that continued investigation. But I'm very much in this direction. So we're not quite there yet, but that is absolutely the direction that we're headed.
Yeah, that totally makes sense. All right, so we're at the end of time. thanks everyone for joining, especially thanks to you and the panel for joining me today. I think it's been really insightful. I think there's been a lot of good information produced. I want to encourage the audience to feel free to reach out to us. The contact information is here. We will have the video available, video recording of this available tomorrow on our website. So you can, right where you registered for the webinar, you can go back and you can get the, review this and get this information one more time if you want. So again, thanks everyone for joining. Thanks to everyone in the audience. You're the most important. And then the panelists, thanks for joining me today as well.
Thank you, Mike.
Really enjoyed it.
Thanks, everyone.